We also focused more on increasing kilometers of our own vehicle, which by doing better driver management and allocation of drivers to the vehicles. In view of that, the total kilometers from the own vehicles have been increased in the Q4. With this background, just I want to brief the results of the company. During the Q4, we are in a position to reach the total income of rupees 603 crores from rupees 498 crores. And the increase in revenue is mainly contributed by our goods transport segment. The revenue from this segment is increased to rupees 535 crores from 417 crores. And the increase in goods transport revenue is on account of increase in tonnage by around 15% and increase in realization per ton by around 13%. The EBITDA of the company is increased by around 67% from 59 crores to 99 crores and percentage is increased by around 4.5% from 11.8% to 16.34%. The EBITDA of GT business is increased by around 1 or 2% from rupees 48 crores to 97 crores and percentage to the revenue is increased by 6.6%, that is from 11.5% to 18.10%. The PAT of the company is increased by around 1.6 times, that is 1,637% from rupees 2 crores to rupees 37 crores and percentage to revenue is increased by around 5.74% from 0.43% to 6.16%. During the year, to reward to the shareholders, we did open offer of buyback of 20 lakh shares, excluding the participation of promoters and promoter group. And board is also announced the final dividend of 4 rupees per share. With this, I request the participant to ask if any questions for more discussions on the results. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. Participants, to ask a question, please press star, then 1. The first question is from the line of Pranav from Iden Investments. Please go ahead.
Hello. Congratulations, sir, on the brilliant results.
Thank you.
First question was to understand where are we gaining market share from the unorganized players, and if that is the primary contribution for the increase in the goods transport business.
Yes, we are gaining market share from the unorganized people. Basically, during this period, because of the lockdown restrictions and because of the pandemic, and along with that, the fuel price is also increased. So that the position of the unorganized players in the industry is very tough. And on account of that, we focus more on conversion of business from unorganized to organized players. And especially, we did a lot of this product-wise study on a geographical basis. Say, for example, particularly say cities like Delhi, Kolkata, or Mumbai, or even tier 2 cities, we analyze the movement of the goods. And accordingly, we targeted the customers and we did a consignee marketing. Means the people who are receiving the goods, we targeted them and we converted many of our new customers and added to our foray in the current year.
Okay. Understood, sir. My next question was on the biodiesel. So, are there any modifications that we have done to our own vehicles for better biodiesel uptake? And in view of the ethanol blending targets that have been brought forward by the government, do you think that cuts into our competitive advantage because of our higher biodiesel usage compared to competition?
Yeah, obviously for vehicles, there are no major technical modifications are required. But what we did, even for usage, there should be certain specific planning needs to be done. especially about the transportation of this biodiesel, storage of the biodiesel. Even we have to do certain modification in the vehicle tanks, the diesel tanks also. And seasonally, we have to always monitor how this the thickness of the biodiesel. That is very much important. So accordingly, considering the geographical temperature across the country, we use biodiesel as and when required. But again, see, cost is also a very important factor here. So always what we do is we always compare with the normal fuel versus the biodiesel. If it is significant, say 5 to 6 rupees difference, then only we will go for it. Otherwise, what we will do is if because of their material costs also increase, they will increase the prices. At some times, actually, we decrease the usage of biodiesel. That is what happened in Q4.
Right. Okay. And so, if I understand correctly, so we use the sugarcane blended biofuel, or there is no specific type that we have?
No, it is more of palm oil and the animal, usage, but we don't know much about it.
Okay. So it is pure and according to the price differential. And okay, understood, sir. Thank you.
Yeah. Thanks.
Thank you. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
Sir, so just wanted to understand that, sir, how is the first quarter panning out, sir? I am sure that it must be better than last year because, sir, this time transportation was not stopped by the government. Sir, and sir, also for the full year, sir, what kind of trend you are seeing, sir? What kind of feedback you are getting from your customer? You think demand is healthy? And so what rate can we grow this year?
Yeah, you're right. Especially in quarter one compared to last year. Last year what was happened is they announced the entire nationwide lockdown, and even they restricted transportation activities also. But during the current scenario or current quarter one, basically there was no nationwide lockdown, and even authorities have been diluted at a district level, state level, like that. So considering the number of cases and all, actually they put a lockdown restrictions. Accordingly, we also modified in our operations, and we are in a view that in first quarter there will not be much of a loss as we declared in the last year. And whereas in the last last year 3 quarters, we did a profit of around 109 crores. So definitely, considering that if the things are improved, if the diesel price will not increase much, then we are hoping that there will be better results in next of the period.
Okay, sir. Sir, and sir, also wanted to understand, sir, that what is our capex plan for the year? Are we planning to add some more trucks?
Yeah, basically we have planned much of a higher capex, but considering again this lockdown restrictions, we are planning to incur a capex of around 60 to 70 crores in the current year.
Okay.
And the majority of the capex will be for our goods transport segment.
Okay, sir. Thank you very much. I'll come back to Vitti.
Thank you.
Thank you. The next question is from the line of Rishit Shah from Danki Securities. Please go ahead.
Good morning, sir. Congrats on the great results.
Excuse me,
Thank you.
So your voice is not clear. May we request you to use your handset, please?
Yeah, is this clear now?
Yes, a little better.
Yeah, okay. So the question is more so first question is regarding the GT bus operation segment. So firstly, if you can just give us the growth or degrowth in terms of realization and passenger count.
Yeah, sure. You want year on year?
Yes, year on year.
Yeah, year on year, the passenger segment revenue is reduced by around 20%. And we have also reduced the number of buses by around 46 numbers. On account of that, there is a decrease in number of passengers by around 8%. And there is a decrease in average seat occupation also by around 2.5%. And there is a decrease in realization per passenger by around 13%.
Okay. So basically, sir, we see the level of revenue quarter on quarter is around similar for the bus operation, but the EBITDA, if you see, has been, I mean, there is a drastic drop.
Yeah.
So, I mean, if you can just elaborate on what is the reason over there?
That is mainly on account of increase in the diesel rate. Since we are unable to, get the demand of the passenger, we are unable to increase the rates also. So that we are unable to pass on this increase in diesel cost to the passengers. So that's the main reason for decline in EBITDA terms.
Okay, understood, sir. So, secondly, about the GT segment, so you have in the presentation you have mentioned that you have kind of adding electric vehicles to the fleet.
Yes.
In that sense, can you throw some more light on that?
Yeah, basically, considering the current trend in the industry and even the government is more focusing towards electric vehicles in the coming days, we also started adding some of the electric vehicles in the current quarter. And the top management of the company is continuously interacting with some of the OEMs who are in the process of manufacturing of these electric vehicles. So that whatever best possible from these vehicles, definitely we want to adopt those best things in our operation model. That is what the purpose of the company is.
Okay, so I mean, do we have kind of any target that we need to add this much percentage of fleet as EV in the current year or going forward?
No, it's all again based on the technical analysis and based on our requirement, we will take a call. And see, first in Q4 we have added around 6 vehicles, and we have added another 20 vehicles in the Q1 also, the smaller capacity vehicles. Okay. So this, considering our requirement and the technical viability and the cost analysis, definitely we want to adopt more of a new kind of a things in our operation model.
Okay, got it, sir. So the electric charging infrastructure also, that also you are kind of developing in-house, or I mean?
Yes. Now currently it is developed in-house, and we are using basically these local vehicles so that within the city limit these vehicles are operating today. We have already enabled the charging facility also.
Okay, that's great, sir. And last one bookkeeping question about sale of power and air transport. So can you give us the revenue and EBITDA for the same for the quarter?
Yeah, it will. You want year on year?
Just the revenue and EBITDA number would do.
Yeah, sale of power, we did around 2 crores revenue in the current quarter, and the transportation passenger is around 3 crores.
Okay, and the EBITDA?
So EBITDA is negative in the current quarter.
Okay.
Just I will come back to you on that figure. Okay.
Okay, sure. Thank you. Thank you so much.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Good morning, and thank you for the opportunity. Firstly, sir, if I just look at your realizations per ton on the goods segment, based on the tonnage that you just said. So the realization is largely similar in the last 3 quarters, around the 6,200 or 6,300 kind of range. And we have obviously passed through the diesel costs. The realization hasn't moved up. Is it like we conclude that your lead distances have kind of come off a bit in the last, especially the Q4?
Sorry, will you repeat your question, please?
How have the lead distances been, sir, in the Q4? Because your realizations haven't gone up per ton, especially with the way the diesel costs have gone up.
So lead distance is almost similar as compared to the Q3, because in terms of region-wise movement also we studied, there is no much change in the region-wise contribution and even movement of the goods.
Okay. So the question is, because if your lead distances have kind of remained flat, your realization, basically your selling price per ton, your revenue per ton should have gone up given that you have passed on the diesel costs.
Yes.
But if I look at the numbers based on the tonnage that you have given, it's largely 6,200 rupees versus 6,150 in the third quarter. So just trying to understand, why the increase hasn't been, to the extent of at least the diesel cost increase sequentially.
No, basically what we did is we tried to increase the kilometer contribution from the own vehicles. There is a cost in. Sorry.
Okay. Yeah. Sorry. Yeah.
Yeah, that's the reason we are in a position to maintain EBITDA level also. If you see the overall cost movements, considering the increase in fuel cost, our diesel percentage is not increased so much because diesel rate is increased, but diesel percentage is also increased. But actually what happened, the kilometers of the own vehicles have been increased. On account of that, the lorry charges as a percentage has come down. And automatically the fixed cost related to vehicles have been reduced as a percentage to the revenue.
Understood. So, so what has been the price hikes that you have taken in this quarter?
No, we have not increased any freight rates. We have not increased any freight rates.
You're not increased at all. Okay.
Yeah, there is an increase in realization by around 1%. It is even sub 1% because of change in the mix of the commodities.
Right. And secondly is your other the fixed overheads, the fixed costs that you had been telling that you have been looking to kind of contain it. Can we assume stays at this level, like your employee costs are around that 85 to 90 crores, your general fixed overheads, say for the whole year of FY22, can we assume that it stays at this level? Because in the past your employee costs have been higher, about 95 crores plus.
Yeah, for the time being, this trend will continue. Again, considering the growth in the business in quarter 2 and quarter 3, again, we have to really look into these costs. The reason is, again, expectation from the staff will come for, into picture.
Sure.
If the things are improved, again, we have to give some benefit to the employees.
Right. Understood. Just lastly, on your Surat facility, could you give some update there? How is it kind of scaling up, and are we seeing some more traction there?
Yeah, basically Surat facility, the moment it's started commercial operation, the tonnage has been improved tremendously. And that moment we are unable to continue on account of decline in overall textile industry. But compared to the other operators in the industry, we are doing much better from Surat. Especially Surat booking as well as even delivery to Surat also have been improved. But if we see the tonnage as compared to earlier period and the declining trend in the industry, there is an increase of around 20-25% tonnage from Surat.
Okay. Right, so thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Yeah, hi, good morning, sir. I have first question on your tech, in overall of your business. The new age startups generally talk about a lot of tech in their business. How do we think that we are placed on that front and our ability to compete on tech? Do we really require tech so much because we have high customer base of SME, or how do we see ourselves in terms of our requirement of tech and steps going forward?
No, you are asking about the industry?
No, yourself. How is our technology in our business at current levels? Do we see it the use of technology significantly higher in future periods, or are we completely well in time for our technology in our operations, use of technology?
Yeah, definitely we are much ahead as compared to the other players in the industry. The reason is basically we are having an in-house IT team. Continuously we do a lot of innovation in the IT sector, especially IT requirements of our company. And basically what we do is we move towards how the customer's requirements are. And apart from that, we always try to improve our process so that actually the service levels would have been improved as compared to other operators.
Okay. Okay. So my second question is on your employee cost. So few years back we did a major employee cost increase because I think because of some labor rules at that time. Is it something of that sort can be expected in like over next 2 years? I mean, some compulsory upgrade in salaries of employees, or I mean, it would be only based on improvement in profitability of the company.
No, there are no such plans in the government also. Basically, the government have changed certain policies after this new government. But currently, the existing rules are as per the requirements of the given labor laws, and we compared with a lot of earlier, there used to have a lot of unrest of the labor or labor these unions and all these things. So such kind of movements are not there as of today. And compared to this current minimum wages and even the support from the government, these trends will continue for some time. There will not be immediate again change in the labor law which are or which will majorly impact on the operations of the company.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Kushal Shah from Dhanki Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity, and congratulations on the good set of numbers. So I just had 2 questions. I missed the tonnage number that you shared earlier for Q4 and for the full year. If you can just please share that.
No, this time actually we have given in the presentation itself. Basically, the tonnage is improved.
Okay, so this on page number 25, when it says increase in tonnage by 6% quarter on quarter and 15%.
Yeah, quarter on quarter it is increased by 6% and year on year it is increased by around 15%.
Correct, but sir, this 15% is for the entire year, no, not for the entire year, right? Just for the quarter.
Yeah, just for the year on year. Q4 of last year versus Q4 of the current year.
Correct. And for the full year, sir, what was the tonnage?
Full year it is declined by around 14%.
Okay.
For 12 months.
Understood. And the second question was on our rentals, the branch or the office rentals that we had negotiated. We had reduction, a decent reduction, if I'm not mistaken, I think, per month. Now, does that continue even today, or is it likely to continue in the next, let's say, a few quarters, or we have now come back to the earlier rates?
No, that exercise we did in Q1 of last year, and accordingly the rent expenses has been substantially reduced in Q1, and the things were normalized from Q2. So Q2, Q3, Q4, it was at a normal rent actually we paid. And in this current scenario also, some of the requests, we made some requests, but the overall amount of reduction in rent is very, very minimal.
All right. So just to kind of clarify the fixed cost, which I think one earlier participant had also asked, that will kind of remain more or less steady at the Q4 levels, what we have seen in Q4 for the current year.
Yes.
Thank you, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Bhargava from MK Global. Please go ahead.
Hello. Thank you for the opportunity. My question is regarding the revenue from agriculture and textile. If you can tell me how much it was. Last quarter, I guess it was 8% from revenue from agriculture. Has it been increased, or how is it?
Yeah, again, there is some improvement in agriculture commodities contribution. Basically, again, there is an improvement of another 1.5%. So total contribution, including pesticides, food and agriculture commodity, it is in the range of around, say, 9% now.
Okay. And regarding the utilization levels, how is it?
Yeah, utilization level in Q4, again, the utilizations were, because of this hub and spoke model, as and when we use the vehicle, we operate with 100% capacity. Otherwise, we halt those vehicles for some time. But there were no such kind of haltings in Q4.
Okay. And regarding the electric vehicles that you have started, how do you see the performance of those vehicles? Like, do you see the TCO parity being achieved with the normal IC vehicles? How do you see the performance of those vehicles as compared to the normal vehicles when compared the cost and all that stuff?
Yeah, the performance is much better as compared to this normal vehicle, and the cost of operation is very less. That is the most important factor in electric vehicles.
Okay, thank you very much.
Yeah.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Rajakumar V, an individual investor. Please go ahead. Rajakumar, an individual investor. Please go ahead with your question.
Hello, can you hear me?
Yes, we can.
Yeah. Good morning, sir. Congrats for the good set of numbers. Sir, just a couple of questions. The first one is, I heard a lot of gas companies setting up the LNG station, particularly Petronet. I saw the results, and in the commentary they mentioned that they are looking at setting up the LNG stations mainly for the truck industry. And they were telling that the cost of operation will almost come down to 30% for people who convert from the traditional fuel to the LNG. So just wanted to know, I think you mentioned about biodiesel, but if you... Hello?
Excuse me, this is the operator. Mr. Rajkumar, we cannot hear you. Your voice is not audible.
Hello? Yeah.
Yeah, can you hear me now?
Yeah, please continue.
Yeah, sir, I was talking about you talked about using biodiesel as an alternative fuel. Any outlook, on converting any of the fleet into LNG model as well? Because I believe you can reduce your cost in more than 30%. That's what the gas companies are talking.
Please send me the details to my email ID. I will forward, discuss with our technical team, and let us discuss it separately. Okay?
Yeah, I mean, if you could hear the commentary of Petronet LNG, the last quarterly results, they have said that they are looking at, if the truckers can convert the fleet, they were talking about almost 30% reduction in cost. So, if you could please...
Yeah, please send me the details.
Yeah, I'll do that, sir. So the second question is, there are media reports that the rental markets have started coming down in the current quarter compared to the previous quarter. So if you could please comment on that.
Rental means the vehicle hire charges you are saying?
Yeah.
Yes, even in our case also the hire charges have been reduced as compared to Q3 versus Q4 in spite of increase in the diesel cost. But this trend may not be continued for a long period because the fuel price is increasing continuously. Ultimately, the sustainability of these hired vehicle owners are also important. So that trend may not continue for longer period, considering the increase in diesel cost.
Okay. So the current quarter rentals are also less than Q4. Is that correct statement?
Sorry?
You said Q4 is less than Q3, so I'm asking currently at the Q1 is also less than the last year's Q4?
No, I don't have data as of today of the Q1 of this current year.
Okay, sir. Thank you.
Thank you. The next question is from the line of Dipesh from Equirus. Please go ahead.
Yeah, hi sir, good morning and thank you for taking my questions. Sir, I understand the pressure on the freight rates and the volumes currently, but the diesel prices continue to go up, right? So just want to know your outlook on the margins. What do you think about going ahead?
So currently it is a very challenging period of time for us because of lockdown restrictions again in the market. But we more focus on the volumes as of today. So considering the growth in volume, again we will take a call on the freight rates.
Okay, but till now there is no increase in freight rate. Okay.
As of today, we are not increased, but we are more focusing on the volumes now. Then how the market will turn accordingly, we will take a call on freight rates.
Understood. And sir, the volumes in Q1 are obviously down this quarter. So just wanted to understand, you said the overall fixed cost will remain same for the entire year, but specifically for this first quarter of FY22, are there any steps taken to reduce the fixed cost and bring down the losses or the margins to improve the margins in this quarter?
No, we have already taken steps earlier period also. The same steps are going to be continued. And basically about the employee cost and all, we cannot do reduction more than what is currently we are incurring. Okay. And even about vehicle taxes and all, yes, because these are all restrictions at a ground level, local level. So earlier what used to happen, there was a nationwide lockdown, so we are very much sure that there will not be much of an operation for next so and so days, so many days. But that kind of trend is not there as of today. And even some of the volumes are also we are moving. So considering that, we have not opted for even no use option in the current year. So there will not be much change in the fixed cost in the quarter one. So accordingly, but we are doing some movement of goods also. It is not that it is completely halted as compared to earlier the lockdown restrictions.
So, but will you see the lorry hire as increasing because obviously the freight rates are lower in the market, so you can use more of hired vehicles than your own vehicles. So are you doing that thing in the first quarter?
No, basically usage of our vehicles is also important because we are incurring the fixed expenses. The moment we idle our vehicle and hire the outside vehicle, then the fixed cost will remain the same. That will be further loss to the company.
Understood. And sir, can you just share the total number of permanent employees that you have at the end of FY21?
Sorry?
A total number of permanent employees that you have at the end of FY21. I think last year it was 99,700, right? So has there been any reduction in this year?
No, it is more or less same, but actually what happened, the attendance of the man days have been reduced in the current year.
Okay.
That's how the reduction in the employee cost is there. Okay. And there are some decline in the administrative staff, but there are increase in the number of drivers and all, and we are focusing to deploy more of a drivers on the vehicle so that our kilometers will be increased.
Right.
That exercise what we did in our quarter 4. Accordingly, the own vehicle kilometers have been tremendously increased.
Right. And lastly, sir, you spoke about in your opening remarks that the biofuel cost has also increased. So since the palm oil prices continue to rise, so we will see this reduction in the biofuel usage going forward, at least in the first half of this year.
Yeah, Q4 that trend was there. It was a reduction in biofuel. Again, we are since the diesel price is increasing, again there is a more flexibility of supply of biofuel. So the quantity will little bit increase in the quarter one.
Understood, sir. Thank you and all the best.
Yeah, thanks.
Thank you. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
Sir, wanted to understand, so that recently there is a news that, sir, delivery, they are coming out with a IPO at a $4 billion valuation. Sir, and also, sir, there are many startups that like Rivigo, etc., sir, which are trying to do something like what has happened in the passenger taxi segment, Ola and Uber. So, sir, what is your judgment, sir? How is this going to impact us, sir? Is there some aggressive discounting going on by these startups in logistics? And, sir, how is it likely to impact our business?
See, our operation is much different as compared to these operators. If you see the delivery, they are highly focused on this e-commerce business and B2C transportation business. But our operation model is, this operation model is highly contributed by the unorganized players. So we are gaining, market share from these unorganized players to the organized players. So the newcomers, whatever tech-based logistic companies are coming, they are more towards the B2C business, and it will not impact much on our business.
Okay, sir. So you don't see any impact and no impact of discounting on the market, etc.
No. See, whatever they do, it will not impact on us. Say, for example, since you have mentioned the name of delivery, see, their major contribution to the revenue is from e-commerce players. And the e-com player, they will never pay any margin to the transporter or the service providers. They provide very thin margin. Accordingly, you can see their losses numbers also.
Okay, sir. Sir, and also wanted to understand that, sir, what is our current fleet utilization? And sir, also, sir, how are our realization of freight rates, sir? How have they moved in the past year?
See, about utilization, always we go with 100% utilization whenever the vehicles will put into on road. Say, for example, we are having a hub and spoke model that will help us to use vehicles effectively. That's the reason, if you see, we can increase the kilometers even for our own vehicles by doing some modification about driver mechanism or driver allocation in our system. And apart from that, if you see the freight rate, last year the realization is improved by around 12%. We have taken an increase in freight rate in the first quarter itself, so that has been continued for a full year. Now, current year, again, we are more focusing on the increase in the volumes, considering there are disturbances in the market. So as of today, we have not taken a call on increasing the freight rates. But considering the movement of the volumes and the fuel price, again, we will take a call in the coming days.
Okay, thank you.
Thank you. The next question is from the line of Shushital from Samatva Investments. Please go ahead.
Hi, sir. Good morning. Thank you for this opportunity. I just wanted to understand, could you give us the breakup of revenue industry-wise for this quarter, sir?
Breakup of revenue?
Industry-wise, like agriculture, textiles, what would be it like? The total breakup of the revenue.
Yeah, basically the cloth business, which is contributing around 17%.
Okay, sir.
The food and agriculture, it is around 9%. Okay. Electronic goods and all, it is another 8%. And basically the spare parts, machinery, metals, industrial goods, all put together, it is around 6% each. Means the spare parts, vehicle spare parts are around 7%. The industrial machineries are around 7%. The metal and hardware is 7%. The industrial goods are around 7%. The general goods are around 6%. Pharma and other is contributing around 6%.
Okay, great.
It is highly fragmented, except this textile goods, which is contributing around 16 to 17%. So rest of all commodities in the range of around 7 to 9%.
Okay, got it. So basically, there's been an increase in textile utilization from last quarter, I guess, no, sir?
Yeah, there is an improvement in textile. And again, this quarter, it has been impacted because of the lockdown. Okay. So once the lockdown restrictions are over, again, the volumes from textiles are going to increase.
Okay, got it. So my second question is kind of a medium or long-term kind of question, sir. You just said that you're taking market share from unorganized players. But like the previous participant who had asked the question, are you seeing any tech competitors, like for example, like Raho or other companies who are kind of offering services like an aggregator for unorganized players? Are you seeing any, can you throw any color on what's happening in the industry like that?
No, that model is basically to provide vehicle to the operators. So what they will do, they will create a platform so that the market can view how many vehicles are they can hire from the market.
Right.
It is actually, we can also use that facility. For example, we are engaged outside vehicle. We can go to that platform and get the hired vehicle based on the data available in that platform. It is not that actually involved into logistics business.
Right, sir. But like on a medium term, like do you see that they are offering a better platform for unorganized players to come back.
No, unorganized, but only to supply vehicle to the other operators. See, they are not involved into the logistics business.
Right, sir. No, where I'm coming from, so usually an unorganized player, usually he does not have the availability of information on to provide services from point A to point B. So usually they have an issue on offering services immediately. So if a platform is offering them that opportunity, can they provide better, can they be able to sustain it at lower margins as well? We just want to
unorganized players, see the kind of market or the kind of activity what they are doing is basically, they are owners come operators. Say they might be having 30-40 vehicles they are operating. Like that. See, they are not hiring the outside vehicles also.
Okay, sir. Got it.
So position of operators will be in a problem as of today.
Got it, sir. Got it. So
and moreover, say if they start engaging outside vehicle, again they have to share margin to the other operators.
Got it, sir. Got it.
Say for example, if we take even in our case also, higher vehicle margin is much lesser as compared to our own vehicle margin.
Yes, sir.
If tomorrow unorganized people, if they start hiring these vehicles from such kind of platform, again they have to share their margin to these vehicle owners.
Okay, got it. So can you just throw color on what has been the breakup of revenue of own fleet and lease fleet in the last quarter, sir?
We can share the kilometers. We cannot share the exact revenue.
Okay.
Basically, the total number of kilometers of hired vehicles are in the range of around 8 to 9%.
Okay, sir. Got it. Thank you so much, sir.
Thank you.
Thank you for the opportunity.
Thank you. Ladies and gentlemen, we take the last question from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Sir, thank you for the opportunity again. On the similar question regarding hired vehicle versus own vehicle, this quarter we have done about 8.6 lakh tons, and we're seeing that the proportion of own vehicles have gone up. In the past, say in FY19-20, with like 7.5 lakh tons as well, we kind of saw the hired vehicle being at a higher level. So do you think till what level do you think you can manage with this kind of a mix of better owned vehicle use versus hired vehicle? I mean, can we touch like 10 lakh tons or like 9 lakh tons? Any broad number that you can give us?
Basically, in my view, the Q4 tonnage versus what the kilometer we did is the best level.
Okay. So if we go up beyond this, you think the hired vehicle use will go up?
Yeah. If tonnage is increased beyond this, again we have to add a vehicle or we have to engage outside vehicles.
Okay. And most probably now you look to add outside vehicle rather than own vehicle because your capex also is not very high.
That is one reason, and because of this movement, see Q1 again the market is badly impacted. And we have to see how the movement will start from henceforth. Because some of the locations, the lockdowns are opened up.
Right.
So depending on these movements, again we will decide about the CapEx and which kind of vehicles needs to be added and all this.
Okay. Right. And my second question is again related on pricing. We have seen some of your peers on the express side, not on the LTL side, but at least on the express side, like Blue Dart and TCI Express. They've taken a lot of price hikes in the last couple of quarters. In fact, their price hikes are much higher than what diesel cost entails. So probably now the gap between an express transporter and an LTL transporter has widened a lot. So do you think it gives you an opportunity to hike prices a bit? I mean, irrespective of the way you were mentioning about the unorganized players, etc. You're probably the price maker there. So just trying to understand why aren't we looking to increase prices?
No, definitely. See, the continuous exercise will be there. Even the same exercise we did last year. See, initially, first itself we have increased the rate, and during the entire year, actually, based on the depending on the tonnage, based on the route analysis, we have some of the routes we have increased, some of the routes we have decreased the rate. So this will be forever. But based on as of today, the current scenario is there is a lockdown and there is no much of a movement or there is no higher volumes. So how the market will turn, accordingly we will take a call. It is not that we are very much stagnant that we will not increase the rate. That is not the scenario.
Okay.
Depending on the circumstances, we will increase the rate. The highest advantage in our case is, again, 85% of our business is we don't have any quotations or agreement with the customers.
Okay.
So we can take a call at any moment. If today I decided to increase the rate, I can do it.
Right. Understood, sir. Understood. Yeah. Thank you so much. I'll get back in the queue.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Yeah, just I want to put one of the participants asked about the wind power business revenue and EBITDA margin. In Q4, we did a revenue of around 2 crores with a EBITDA of around 51 lakhs. And whereas the transport of passenger by air, we did around the revenue of 3 crores. And EBITDA is around, there is no profit, no EBITDA, or it is hardly around 5 lakhs negative EBITDA. So with this information and with this discussions, I would like to conclude this call and thank you for each and every participant. Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.